Welcome back to Pathfinders, a podcast series from RBC Capital Markets, where we explore the fast-moving world of biotech and pharma. I'm your host, Joe Coletti. In today's episode, we'll hear from Brian Abrams, head of global healthcare research here at RBC. In the 2025 Global Biotech Outlook that him and his team put out, Brian will dive into what's shaping biotech, from new U.S. healthcare leadership and AI-driven drug success to GLP-1 expansion and the return of M&A. Now, let's dive into the conversation. Brian, thanks for joining us today.
Happy to be here.
Brian, let's set the broader context to kick things off. Following a mixed year for the sector, biotech was thrown a curveball post-election with a slate of unconventional healthcare leadership nominees. This uncertainty could be the biggest factor shaping the industry's outlook this year. But how do you see this evolving in 2025?
Well, the bottom line is there's still a lot we just don't know. The prospect of HHS head nominee RFK Jr. and others impacting U.S. healthcare policy and drug reviews is definitely still a headwind. An anti-establishment tone, if it were set from the top, could espouse public mistrust in Western medicine and reduce screenings and utilization, and also weaken public health initiatives around things like vaccinations. Incoming FDA Commissioner Dr. Marty Makary, we think, is still a net negative for the group, just given his historical anti-industry stances, which will probably impact new drug approval flexibility and upend a regulatory environment where things have been going pretty smoothly of late, with drug approvals and priority reviews having remained steady in 2024 and a record number of accelerated approvals last year. Interestingly, in a number of meetings with biotech companies, our sense was that most were actually pretty supine about the new administration, with Dr. Marty Makary viewed as credible and probably somebody who's more focused on food safety anyway. CDER head Dr. Cavazzoni's recent departure spun positively, as that could potentially pave the way for a more flexible leader, and optimism out there that a more unified Congress could land more favorably for the sector. But that was before we got the news that Vivek Ramaswamy is leaving the administration, and I've sensed a lot of folks, both investors and people in industry, had viewed him as providing kind of a backstop in the face of potential cutbacks, just given his pro-industry stance. So we'll really have to see how all this plays out.
Despite all the uncertainties that you just mentioned, there's still plenty of opportunity in the sector. Can you talk about some of the ones that are emerging that you're most focused on?
We're still seeing world-class innovation in the group, and successful companies are being rewarded with substantial stock appreciation and capital access. So that's encouraging. So nice payoffs for those willing to take the risks. Changes at the FTC could catalyze more M&A this year, which is always a big driver in biotech. Sentiment among our surveyed investors seems incrementally more optimistic as compared to 6 months ago. And we're still hearing companies are able to get good pricing power without a ton of payer pushback as they launch new drugs, particularly in rare diseases. And they're also able to increase prices of more mature therapies to sustain some growth. On that backdrop, we see the best opportunities, first off, in commercial stage companies looking most out of favor, perhaps following exaggerated recent downside moves. Secondly, companies that could be M&A targets if BD activity picks up again in the space. And third, names that have underappreciated near-term upside catalysts grounded in sound mechanistic rationale and prior data.
What about the investment landscape? How has that changed, or how do you see it changing right now?
I think that the macro has become increasingly dominant. Biotech, at least smaller cap pre-commercial names, tends to have a long time horizon. Drug development can be a 5 to 10 year cycle. That doesn't play that well in a persistently high interest rate environment, which is part of why we think the group's underperformed and is probably something that's going to remain an overhang here. Policy and regulatory uncertainties have been more prominent now than in the past, not just under the new leadership, but also as people try to digest the impact of the Inflation Reduction Act, or IRA, on revenue tails. IRA is the most sweeping change to drug pricing that we've seen in years. And it's complex, and there's still a lot of unknowns about exactly how it's going to affect the whole biopharma group. Pharma last year deployed $6 billion to in-license or partner Chinese pharma assets. So that's definitely a growing trend worth watching, which we haven't seen in the past. Some worry that cheaper assets coming out of China could undermine values of some of the innovative US-listed small and mid-cap companies. Despite those headwinds, though, new drugs are getting approved, many new drug launches are going well, And the underlying science in terms of how drugs are developed, the modalities we have to hit a molecular or genetic target, and the tools we have to measure and predict future success have never been more advanced. So it's still a really exciting time to invest in the biotech space.
Brian, let's talk a little bit more about technology and innovation, themes which have really been driving and catalyzing investor excitement and opportunity throughout the space for the last at least 18 months, maybe more. Can we talk a little bit about the technologies and the therapies that we should see breakthroughs in your view, in the next year, and some of the key launches that you're really zoning in on?
So this year, we're looking at a number of things. Next generation oncology, targeting cancer cells more specifically to avoid side effects. Obesity, we know the GLP-1s have been huge successes, but how can we find better tolerated and more convenient options, either as replacements or as add-ons? In neuropsych, we're closely watching Huntington's disease, depression, and epilepsy, all spaces with novel approaches that are rapidly advancing. We've seen increasing interest in large market spaces like cardiovascular and pain, with cardiomyopathy launches from several biotechs this year. These are areas that weren't even recognized just a few years ago. The launches of new Alzheimer's drugs have been slower than anticipated, but that can pick up as doctors get more experience and the agents become easier to administer. And whether GLP-1s will work in that setting, we'll also learn this year. That's something that could further disrupt the space. And lastly, rheumatological disorders. That's a huge subsector. That's likely to remain high profile, with many promising new targets and approaches.
There's a long list of breakthroughs that you mentioned there, and I know we're just scratching the surface, not just on that, but on the overall outlook for next year. And I encourage our listeners, definitely, it's worth contacting your RBC representative to take a look at the full global biotech outlook. Let's move on to the deal environment. What do you expect to see in terms of activity and trends out there this year?
We calculate that large biopharma companies have over $350 billion in global annual sales that are going to be at risk over the next decade due to patent cliffs. They have over $150 billion in cash on their balance sheets, and likely way more dry powder to do deals if they're willing. So the stage is set, we think, for more deal activity. And we note that 30-day premiums on deals have been getting higher, peaking at 120% this past year. So finding those takeout targets has proven fruitful. Deal flow was slower in 2024, but we've already started to see things pick up again, with a nearly $15 billion biotech deal just announced earlier this month, starting off the year with a bang. That's almost 3 times the size of the biggest deal in all of last year. We think that could continue, especially with a more permissive FTC.
Now, to wrap up and to leave the listeners with a little bit of directional input, I want you to just give me, your one phrase or really your headline that you feel will define the biotech story in the next year.
Uncertainty and opportunity. A lot of unknowns, but a lot that could move the needle if you find the right stories with the right teams, underlying science, clinical development approach, and commercial prowess.
Brian, thanks very much for joining us. That's all for our conversation today. Thanks again for listening to Pathfinders in Biopharma, brought to you by RBC Capital Markets. Please remember to subscribe to get more great content and be alerted about future episodes. This episode was recorded on January 24th, 2025. If you'd like to learn more or continue the conversation, please visit rbccm.com/biopharma or contact your RBC representative. See you all next time.
This content is based on information available at the time it was recorded and is for informational purposes only. It is not an offer to buy or sell or a solicitation, and no recommendations are implied. It is outside the scope of this communication to consider whether it is suitable for you and your financial objectives.